Welcome to the first meetup of 2024. We're really excited to have you all here. And we have a great lineup today. Victor and Aleem are going to talk to you a little bit about what's going on in 2024, a recap of 2023 a little bit, what to look forward to in 2024, key trends, a lot of good stuff coming, a little bit about MEVs, a little bit about Bitcoin ETFs, but you're going to hear a little bit more about that in a bit. And then we have an awesome speaker today, Kevin. We're super excited to hear from him, and then we'll get started. So just again, before we do start, I just want to remind everyone that everything that we talk about here is just for informational purposes only. So this is not financial advice. And as you guys just heard, we're going to record this meeting and post on YouTube and possibly Twitter. So you'll be able to see it a little later, just in case if you wanted to go back as well. And with that, I'm going to introduce the team. Aleem, you want to go first?
Sure. Hey, everyone. My name is Aleem Kamisa. I am one of the co-founders of DeFi Toronto. And we've been running this meetup since 2019. We've covered a lot of great topics, hosted some incredible speakers from across the space, some that have gone on to start crypto networks and protocols that are worth, tens of billions of dollars. And we've been very much like a grassroots type of organization that is really just focused on the promotion of DeFi education and giving developers and founders a platform to really showcase their projects and research. My background is is DeFi. I've worked in financial services and consulting and done the traditional thing for quite some time, and then over the last several years, I've really focused on DeFi. Two areas that I'm very passionate about. One is decentralized governance within DeFi. And I work for a company called Delve, and we've launched a governance platform called Council, which includes a protocol and an SDK to build on, a front end, and everything you'd need to basically operationalize a DAO. Potentially in just a few minutes. And I'm also working on a new AMM called Hyperdrive. So think Uniswap, but for fixed rates. The variable rates within the DeFi space are plentiful, but obtaining a fixed rate of return, which is really enticing for a lot of investors, also a lot of institutions, and a lot of treasury managers for DAOs as well, who are managing large treasuries and needs a way to kind of diversify their portfolio, maybe a little bit more risk off. That's where fixed rates are quite enticing. So we are about to launch in the coming months, testnet and then mainnet, and so we're very excited. We have our final audit coming up very, very soon, and I'll stop there and I'll hand it back to you, Sophia.
All right. One of our other co-founders is Imran. Imran's not here today, but you can find him on Twitter if you want to follow him right there. And right now what he's working on is a project called Lang Wallet. So hit him up if you want to talk to him a little bit more about that. And with that, I'll pass it on to Victor.
Good evening. I'm calling from China, Shenzhen right now. So excuse me if my connection might be not the best. So a little bit about myself. I work for a crypto hedge fund for foreign capital, and there I do fundamental research on token economics and blockchains, different blockchain and tokens. I also teach a course at a university on blockchain use case, and I'm also on the curriculum advisory committee at George Brown. So I'm very excited in the crypto space, and I used to be in the traditional finance, particularly in pension investment, and but this area is change. One day is like 1 month in traditional finance. So much innovation. So I'm very excited doing research and also very passionate about education. So I'm glad you all are here to join us today. Pass back to Sophia.
Awesome, thank you. And then Mark, I'm going to pass it on to you.
Thank you, Sophia. So I'm Mark. I'm going to be on mute very soon because I'm in a staircase here, so it's really a little bit noisy. My background is education. I led the launch of the first postgraduate certificate program at Georgetown College, where I had the chance to have Victor. Aline was teaching also with me. So part of directing to do the program, a lot of also contributions from ChainSafe at the time to shape the first program in 2018. I'm teaching at a university, which I also helped advise, called International Business University, IBU. I'm teaching the MBA, the strategy course. And I'm also very much involved with IEEE, which is the largest technical organization for electrical engineers, computer science. So IEEE blockchain, I'm building a bit of a network here in Canada to tie with the rest of the world. And very active on the cybersecurity space, where we are organizing a conference in Montreal in October for 5,000 people attendees that we're expecting this year. And there will be a pavilion for Web3. So I'm in charge of that. So I want to give you guys the chance to DM and make sure you're going to be like visible on this pavilion and talk to North America and the cyberspace in particular. When I'm not doing these kind of things, I'm working with Block Zero, where I'm the lead for public services at the strategy management firm. So we work with exchanges, we work with Bitcoin miners, mergers. So if you have any needs for consulting, give me a call as well. And of course, a big supporter of DeFi Toronto.
Awesome.
Back to you.
Thanks, Mark. And I'm Sophia. Nice to meet y'all. I'm one of the organizers of DeFi Toronto, and I work at ChainSafe as the experiential marketing lead. So what we do at ChainSafe is we're an R&D firm, and we specialize in infrastructure development and Web3 gaming. We're also like well known for protocol level contributions to like Ethereum, Filecoin, Polkadot. And then we do a lot of solutions in like gaming, cross-chain, bridging, and decentralized storage. So yeah, we basically have 130 people in 33 different countries. So we're kind of all over the world. And we try to help onboard devs into our community. And our mission is to onboard the next 1 million devs into Web3. So if you want to know more, you can hit me up a little bit later. My Twitter is on there, or just DM me. And with that, I'm going to introduce Johnson. Go ahead.
Hi, everyone. My name is Johnson, Jose Matthew. I am a marketing manager at Virgo CX. Virgo CX is one of the few regulated crypto trading platforms in Canada, on-ramp and off-ramp. Personally, the part of my work that I like a lot, like I do handle a lot of activities there, like events and marketing and all of that stuff. But then the one thing I would like to highlight is that we have a really good newsletter, which I pour my heart and soul to write and maintain. And I think this is a newsletter reader thing that all newsletter readers love their newsletters. But it's also not, how do I put this? I would say, yeah, I would say like just give it a shot. And like let me know your thoughts. As we're going into the bull run, I'm like really refining the stuff. So yeah. Anyway, back to this thing. I'm excited to be here, and yeah, let's get this started.
Awesome. Thanks, Johnson. You've convinced me I'm gonna join the newsletter. Okay. All right. So with that, this is our agenda for the rest of this meetup. So we're going to get Aleem and Victor. They're going to do the DeFi news recap. And then we have our awesome speaker today, Kevin Callahan from Uniblock, who's going to be talking to you about one API to rule them all. And then we have community announcements at the end. So a little bit of a shorter meetup today, but we're very excited to kick off the year. And with that, I'm going to pass it on to Aleem and Victor.
Victor, are you on mute?
Yeah.
Okay.
Thank you, Sophia. I will start cover the first half and the pass back to Aleem for the second half of the news recap. As I'm pretty sure every one of you know that the big news of this month is the approval of spot Bitcoin ETF in the US by the regulator. And for the capital inflow into this Bitcoin ETF has quite a phenomenon. Now the asset under management, if you group all the Bitcoin ETF in US, he has surpassed the silver ETF asset under management. So it's quite remarkable given that it's only less than 2 weeks. So we will see what happened for the next months or years to come, and when will it surpass the gold ETF? So right now, gold ETF is $85 billion if you group all the US gold ETF, and BTC ETF is about $30 billion. So keep eyes on the relative size. It tell you how what's the perception of the retail investor. So it's quite important. And if you truly believe that Bitcoin is digital gold, then you could argue that maybe Bitcoin's ETF asset under management should be very close to gold or even surpass gold. Next slide, please. Okay, if you're new to the crypto space and if you're considering buying Bitcoin, you have more option. You have two choices. Either you can buy Bitcoin directly from crypto exchange like Coinbase, Kraken, or Canadian exchange Virgo CX, or you can buy ETF. There's pros and cons on each method. Just pick the one you feel more comfortable. I will say that for the main hurdle for self-custody, you buy and hold yourself, is that it does require some technical knowledge in the key management, and also you're responsible for the security of your storage. Where ETF, you have to trust a third party. They may have more resource to secure their storage, but you do have to pay an annual fee for their service. And if you want to put in your RRSP, then ETF is the only way to go. Right now, there's no recognition. There's no bank allow you to put your directly put your Bitcoin into your tax shelters account. So next slide. Okay, so what happened after spot Bitcoin ETF? The chance is looking good is that we may see Ethereum ETF approval in the US. So far, there's already 6 applications, including BlackRock. And BlackRock has a very, very good track record in getting their ETF approved. In the past, they have over 500 applications, and there only one of them didn't get approved. Apparently, the CEO very influential in Washington, and so we'll see what happened. And the second thing could be interesting is that, as you know, Bitcoin ETF does not provide any yields. There's no dividends, no cash flow. There's a lot of talk that the Ether ETF could have yields from staking. So basically, you will get some cash flow by investing in Ether ETF. So we'll see what happens later this year. Next slide, please. This is one of the very interesting charts from Glassnode. So here in this chart is showing that the balance of the Bitcoin and Ether on centralized exchange as a percentage of the total supply of their respective total supply. So the blue line, is Ether, and the yellow line is Bitcoin's balance. So for the last few years, I would say 3 years, you can see that Bitcoin's balance on centralized exchange has declined from 17% of the total supply to 12% of total supply in January of this year. So that's quite a bit of drop decline. That means that the liquidity on the centralized exchange is lower. If people want to buy it, there's less liquidity. That means that there will be bigger price impact. Move on to the blue line, which is Ether. The decline is even more dramatic, from 30% to 12%. I suspect the 12% is maybe overstated because, as you know, some centralized exchange like Kraken and Coinbase, they actually stake the token, stake the Ether. You can stake them. So I'm not 100% sure whether this 12% including or excluding the stake Ether. My suspicion is that they are include the stake Ether. So if that's indeed the case, that means that the percentage of the Ether on centralized exchange is lower, even lower than Bitcoin's, will be lower than 12%. So if we're going to have a Ether ETF launch, then the price impact could be even more dramatic than Bitcoin. But I'm just speculating here, so we'll see. Next slide, please. One of my favorite research report I have to read every year is the developer report produced by Electric Capital. Well, not only they did a great job, the more amazing is that over a few hundred community members contributed to this developer report and have great information. So I highly recommend you to go to developerreport.com to look at the full report. Here, I'm just going to highlight some very interesting graph here. So on this slide is showing the number of developer in entire ecosystem, all the blockchain, all the decentralized blockchain here. So the total number of active developer in last year, 2023, is actually declined. As you can see from the top of the light blue line, that's the total developer. So which usually is not surprising. The tendency is that the developer, especially new developer, tend to join after the price has rise. They attract more developer. And as you know, that the 2022 is really a bear market. We only see the bull market maybe the second half of the 2023. So there's developer decline, so it's not big surprise. But what is encouraging is that the developer who has 1 year, especially have 2-year experience, continue to rise. Means that the experienced developer actually continue to grow steadily, which is very good news because those developers contribute over 70% or 75% of all the code in the blockchain space. So those are the very productive contributor of the code. So it's good to see their number continue to rise slowly. Next slide, please. This one is also fascinating. This one, it tracked last year how many new developers joining the blockchain ecosystem. As you can see on this chart, Ethereum by far attract the most number of new developers. Literally, it's like 2.7 times than the second one. But the funny part is that Polygon is actually a layer 2 of Ethereum. So you could say that there are more people joining the Ethereum ecosystem. So that's great news. We know where the talent flow to. So I like to say that for proprietary system, follow the money. But for open network, follow the talent. So see where the talent goes. That's the future. Next slide, please. Okay. This chart is also interesting, almost like a galaxy to see the star and how they connect to each other. So the size of the circle is the relative number of developer for each platform, for each network. The line between the circle, it represent the number of developers doing the development for more than one network. So not surprisingly, some developer may work for Ethereum, but may also doing development for Polygon, because guess what? They are all EVM platform. So your programming skill is transferable between those EVM network. And here you can see that Ethereum developer tend to share a lot of talent resource with other EVM compatible network. So that definitely reflect the network effect of an EVM platform. So it's great news for retaining, for attracting talent to the EVM network. Next slide, please. Okay, so in the developer report, there's one slide which I base to come up this table. So basically, in that slide, it shows you the top 10 network has fastest growth of full-time developer last year, and also that the full-time developer has to be at least 50 or more. So it's basically try to identify the project has attract good talent. And here I'm just showing you the top 9 because I run out of space to show everything. So I have a brief description of each network features and their full-time developers growth rate year over year. And then if they have a token, I put the last year's token price appreciation, just give you an idea how they're doing. As you can see that the most growth is really the first modular blockchain called Celestia. Maybe I'm not pronouncing it correct, but they attract a lot of new talent in the full-time developer, and then followed by Mantis, 290% growth in developer, and then we have Mina, which is a very interesting, a super lightweight blockchain based on zero knowledge proof protocol. So, and so here just some idea, if you're interested in identify the new promising rising stars, so you can pay attention to this kind of a statistic. So next slide. Yeah. So given that we are in the beginning of new year, I thought we put together some major trend that you could pay attention to for the rest of the year. Of course, this is our DeFi Toronto team's selection. You may have some different opinion. You're happy to hear from you, during our discussion. So first, I think most important is whether central bank going to cut interest rate or not. Why is important? Because it affecting the discount rate of any risky asset, not just crypto asset, but also stocks, bonds, real estate, right? Because the discount rate affecting the valuation of all the risky assets. So if central banks start cutting interest rate, it could increase the valuation of risky asset. That's probably good for crypto. So that's first thing to watch out. The second one is the Bitcoin block reward halving. Right now, for each block, it produces 6.25 new Bitcoin per block. And each day, is 900, about 900 new Bitcoin mined per day. So in April, we're expecting the halving, and it will cut down to the block rate by half. So that means that 3.1125 Bitcoin. So significantly reduce the marginal supply of Bitcoin. So currently the inflation rate, the new token issuing rate is about 1.7 annualized inflation rate. That after halving, that means will be like 0.8. So much lower, and it's lower than, it will be lower than gold. And the third trend to watch out is whether the US regulator will approve a spot Ethereum ETF or not. So that's more, everyone knows that, so I'm not going to further explain. And next one is the major upgrade in Ethereum protocol, particularly the EIP 4844. This one will really supposed to increase the scalability for the Ethereum blockchain, particularly will reduce the gas fee on the layer 2. So I have a chart, next slide, please, to show you the potential impact. So here's the project impact on the gas fee of once the EIP 4844 implement. It will cut the gas fee on layer 2 by 90%, roughly 90%. So that will be really good for scale up our the Ethereum network. So exciting to see what one will implement this EIP. Next slide, please. Three more other trends here before I hand to pass to Alim. So one is that, you know, integration of AI and blockchain. As you probably all use ChatGPT one way or another, the question is that, is AI competing technology with blockchain or complement each other, a complementary technology? I did some little bit research. I believe they are complementary to each other. So there's a benefit for each other. For example, you probably saw that BitTensor, one of the blockchain AI-based blockchain network that try to incentivize the development of decentralized intelligence. So, and another way, possible use case is that use AI to run a DAO. So you let a DAO AI do the most of a day-to-day decision for a DAO. That's another possibility. So it's still in the early stage. So, but it's some important trend. This is important trend we can keep eyes on. The next one is tokenization of real-world asset. You probably heard this term in real-world asset quite a bit. And this year, BlackRock CEO has mentioned this as well. He said that after Ethereum ETF approved, the real goal for real thing they're excited about is tokenization of real-world asset. Why is TradFi interesting in this particular area? Is because they can tokenize the asset that already on their book. So they have a lot of asset already. They can tokenize and they still can make a, you know, make a profit, make a fee from those assets when they're trading on the network. So that's the one trying to watch out. And finally, a so-called decentralized physical infrastructure network. Give you an example of Helium, which is a shared Wi-Fi network, a decentralized Wi-Fi network. You could imagine application to other area, for example, decentralized solar generation. If we all have a solar roof, we can share our battery connect together. So that's about 7 trends to watch out. I'm sure there's other trend I failed to mention, but you're happy to hear from you if you have any, thoughts on this. So next, I will pass on to Alim for more coverage. Oh, okay. Here's a little diagram from a research company called Masari, and basically show you how they group different decentralized physical infrastructure network. And you can see there's quite a bit of view. And I mentioned the Helium, but I also mentioned a bit Tensor, but there's many other more. So you can take a look, just give you a rough idea of what the landscape look like. Next slide, please. Okay, Alim, pass to you.
Thank you, Victor. That was really, really insightful recap. Appreciate it. Appreciate that. That was very, very well done. I wanted to talk about two kind of topics that I think are quite important in, the blockchain ecosystem more broadly, globally. And one of them is client diversity. So many of you, if you're a Coinbase client, you may have noticed, I think it was last week or it might have been earlier, but there was an outage if you wanted to use the Ethereum network. So that was related to actually one of the clients that Coinbase uses to interact with the Ethereum network. So Coinbase is basically, as a result of that kind of outage, and that outage impacted 8% of Ethereum validators on the Ethereum network that were using a specific client called Nethermind. As a result of that, they are now starting to address this issue over the dominance of using that specific software client in the Ethereum ecosystem and trying to diversify their client set. So this has already been a concern across the Ethereum ecosystem for a while. And what I want to do right now is want to do a mini deep dive just to kind of explain the fundamentals. What does a client mean? What is a node and all that kind of stuff? So next slide, please. Okay, so we all know that a blockchain network, right, is basically, it comprises many, many nodes. The more nodes, the more decentralized the network is. And these nodes are essentially interacting with one another to validate and verify data that traverses the network. So a node in the Ethereum context is any instance of an Ethereum client software that is connected to computers or other nodes, also running Ethereum software, forming a network. So the nodes are, essentially can run the Ethereum virtual machine. They can run client software, which I'm going to get into. There's multiple types. They can also run validator software as well. So a client is an implementation of Ethereum that verifies data against the protocol rules and keeps the network secure. Within a node, you have two kinds of clients. You have a consensus client and you have an execution client. And I'm going to get into what those are on the next slide. So again, in the Ethereum context, a consensus client implements the proof of stake consensus algorithm, right? Which is responsible for how transactions on the network are actually validated using this proof of stake algorithm. And this enables the network to achieve agreement based on validated data from the execution client. So one thing I should mention, which I kind of actually already did, is that the consensus client can actually be kind of further bolstered with validator software, which would allow a node on the network to participate in securing the network. Again, in the Ethereum context, it would be running proof of stake, in which case you would be rewarded for that, for participating in the security of the network. The execution client is the other one, listens to new transactions that are broadcasted on the network and executes them against the Ethereum virtual machine and holds the latest state and database of all current Ethereum data. So there are many variations of these clients. You can have light clients, you can have full clients, hence there's also light nodes and full nodes. But for a full node that's participating on the network, you typically have, both consensus, execution, and potentially validating on the network as well. Next slide, please. So here, like, I just wanted to kind of show a visual of the problem and the seriousness of the problem. And as you can see, for the two types of client software, for consensus and execution, there's a pretty big concentration, right, across the types of nodes that people are using. So on the consensus side, you have Prism, Lighthouse, Teku, Nimbus, and Lodestar. Shout out to ChainSafe, because they're the ones that are have actually created the Lodestar client. And I believe there's a light client version of that too. But you can see that it's highly concentrated. And on the execution side, it's even more alarming, because the execution client called Geth, you can see that 78% of people or nodes are actually using that execution client. So there's all of this kind of like almost, well, it is actually a pretty significant risk. And for all of the wallets, exchanges, any application that's interacting with the Ethereum network that is using the Geth client, if there's a software bug or an issue that comes up, all of those systems, all of those applications go down. This is why client diversity is so important. And when we talk about decentralization, we should also be talking about client diversity in that context as well. Next slide.
Alim,
yeah,
can I interject here? Go back to the previous slide. Is that it is really good that our community openly discuss that client diversity, and I want to remind people that many other networks have only one client, one node, multiple nodes, but they only have one client. So we as the Ethereum community, we care about diversity, so we openly discuss this, and many network doesn't even mention. So
that's a really good point. And
yeah.
I think this is like important due diligence that all of us have to do when we're interacting with other networks. There's a lot of other networks out there, that L1s that are great and fantastic, and they have a lot of different benefits. But when we think about it, decentralization, we have to think about client diversity, and you got to do your homework when you're interacting with other layer 1 blockchain networks to ensure that there is a significant amount of diversity, and there isn't that that concentration risk. Okay, so next we're going to talk about MEV. Many of you probably know what MEV is. It's maximal extractable value. I'm going to explain what it is on the next slide, but I wanted to start with kind of a little bit of a news event and a new automated market maker. Think Uniswap. So this is called FMAMM. And it is a FM automated market maker. It's a new design for automated market makers, or fit within the larger category of decentralized exchanges that basically batch transactions or trades and eliminate two types of MEV. So one of them is LVR, which is loss versus rebalancing, and this allows people that are using MEV to profit from arbitrage profits. And then there's sandwich attacks, which essentially sandwich other transactions to profit from, almost like front running, knowing what the impact of that middle transaction would have done on the price of that asset across exchanges. And so those comprise about 95% of total maximal extractable value attacks, essentially, that are happening in the Ethereum ecosystem. I should say that not all MEV is bad. There is good MEV and there is bad MEV. So CowSwap, one of the more prominent DEXs or AMEMs in the ecosystem, the research team has come up with this, and they've developed this entirely new product called FMAMM. They're going to be launching with one pool to start, which is Cow ETH, and we'll be keeping an eye on that to see how that develops. Next slide. So, okay, so now I want to go back to the fundamentals. What is a maximal extractable value? So it's basically a concept that's gained a lot of attention in the DeFi world over the last few years, especially with the introduction of a company called Flashbots. And Flashbots is a company that was really an early pioneer in the MEV space. And that led to an explosion of MEV activity across the world. So MEV essentially denotes the additional value that a blockchain validator, again, those that are creating blocks on the network, can acquire by manipulating the order of transactions within a block. It could be front running, it could be back running, it could be sandwich attacks. There's many different strategies of MEV. This should actually just be EG, because that's just front running is just one example. So MEV can provide miners with an extra source of profit beyond what they typically collect, which is block rewards for mining those blocks, as well as gas fees that are collected from users that are transacting on the network. So those are the two typical ways that miners get paid. Now there's this third way, which again can be good or bad, which I'll get into shortly. Often miners are reordering the transactions on behalf of a third party. So for example, if there's a large fund, could be a large hedge fund, a large whale that is trying to reorder transactions in a block because they've noticed that if their transaction goes first, maybe they can profit immensely, knowing that the price is going to go up for a certain asset. They might actually pay miners to reorder their transactions for them and offer them these large bribes. One thing I want to add is that in the traditional financial system, because everything is centralized and there is a huge amount of compliance and regulatory oversight, front running and all this type of stuff would not be possible. It still does happen, but it's usually caught and policed very well. But in the blockchain world, where everything is permissionless and there is no blockchain police, all of this stuff is happening quite rampantly. And there's new innovations now that are starting to address MEV so that people that are transacting on the Ethereum network and other networks don't actually get impacted by the worst prices they get on exchanges as a result of MEV. Next slide. Okay, so two types of MEV, as I mentioned. There's the beneficial ones like arbitrage that actually aid in price discovery and liquidation of assets in DeFi protocols. When the loan to value of certain assets exceeds the optimal or acceptable levels, usually there's liquidations that happen. And this type of MEV or arbitrage is actually really good for the ecosystem. The detrimental ones are like the ones that I previously mentioned, like front-running transactions and sandwich attacks, which again, comprise 95% plus of MEV attacks. These ultimately result in traders on DEXs, like in AMMs, think Uniswap and Matcha and Sushi and others, getting worse prices. You might not notice it because it could be very, very small, but in aggregate, these MEV operators are actually, have extracted, I think well over $1 billion to date, across just the Ethereum network. And I kind of have a very simple diagram here, a MEV, and MEV is usually done via automated bots. They could be ML bots, like, AI bots, or they could just be simple bots that are executing, a very, very simple algorithm. Could be complex as well. But you see a transaction, you kind of foresee how that transaction is going to affect pricing across the ecosystem, across the exchanges, and you try to capitalize on that by either moving a transaction before or after. Okay, next slide. And I think this will be the last one. So we talked about MEV, and now there are a lot of protocols that are actually combating the impact of MEV, or they're participating in MEV, but then actually distributing the revenue that's generated from MEV to the users. which is actually a good thing. You know, because ultimately it's the users that end up kind of suffering, even if it's a very small amount. UMA protocol has actually created a new, or UMA, has created a new protocol called Oval. And Oval is built using Chainlink, which is an Oracle infrastructure company. And they're actually capturing MEV using something called Oracle extractable value, so OEV. And this has to do with pricing. And they're basically capturing that value and, you know, sharing it with the participants on the protocol. So in a nutshell, you know, without getting into too much detail or complexity, you basically get paid to use price oracles like Chainlink. So this is one that, you know, we'll be keeping an eye on. That's quite interesting. And as more MEV innovations come to light, we'll definitely be sharing them in future meetups and future recaps and stuff like that.
Awesome. Thanks so much, both of you. That was a great news recap. Excited to see what everyone's voted with. But if you have any questions, please feel free to drop them in the chat for Victor and Aleem, and they'll be happy to answer them for you. But we're gonna move on to our next speaker for today, Kevin. So Kevin, are you ready to go?
Let's roll. Hey, everybody. Thank you very much for making it out. I really appreciate it. I can't wait to do this in person.
Yeah.
Awesome.
So I'll introduce you a little bit for those of you guys who don't know who Kevin is. While I give you are you able to share your screen?
Still says it's disabled, but I'm sure you're going to figure it out.
I'm going to figure that out. All right. So
Yeah.
Kevin, you can try now and see if it works.
I'm the captain now. Perfect.
All right. Awesome. So Kevin is the CEO and co-founder of Uniblock, which is a developer platform that unifies Web3 entities, including Alchemy, QuickNode, and Moralis, almost into like one toolkit, which I'm sure he'll explain a little bit later. But before Uniblock, Kevin previously worked at Coinbase and Twitter and is an angel investor and LP in various startups and funds, and is an adjunct professor in product management at Toronto Metropolitan University and an executive in residence at Aave Business School. So with that, I'm going to pass it to you, Kevin.
Perfect. Thank you very much. Thanks for the intro. I sound a lot cooler when you say it. Thank you. Let's see if I can show my screen properly. 1 second, everybody. So I'm going to present. I'm going to go to presenter view. Perfect. All right, everyone. Uh-oh. Let's see. It's asking for system preferences, which is going to be annoying. Let's see. Sorry, everybody. Let's see here. Let's see. Let's try one more time. Uh-oh. Sorry. Oh, wait, 1 second. I have to quit and come back. I'm really sorry. Give me a moment, everybody.
That's okay. We'll do some predictions in the chat.
I love it. I love it. I will be back. Sorry.
All right, we'll see you soon.
Maybe if people, you know, while we're waiting, if they want to put some predictions in the chat or for what they think ETH, Bitcoin, Solana, or any of their favorite cryptos will do this year, I'd love to know.
Sorry, we can also do a few community announcements right now while we're waiting, if there is anyone that wanted to say anything today.
Sophia, maybe I will mention a little bit about our next two meetup.
Sure.
So we have an interesting speaker coming up. He's the chief scientist of Chainlink, and he actually wrote a novel, a fiction, about the crime in the crypto space. The book, the name of the book is called Oracle. So he's going to come to our February meetup, online meetup. He's based in New York, I believe. So we're going to have a fireside chat, how basically talk about how his day job as a chief scientist at Chainlink help him come up with the idea to write his novel. And also that in March, when we have in-person meetup, we're going to give up a number of copy of his fiction. So please come to join us in March so that you can get a copy of this new crypto-based fiction.
Awesome. Thanks, Victor. Super excited about our next few meetups. So like Victor said, our next one's online, and then the one after that is going to be in person in March. So it looks like Kevin has his slides up. Kevin, good.
We had a minor issue, but we're back. We're good to go. Thank you for your patience. So you can see my screen, I believe, and I guess we'll take it from there. So thank you very much for making time. Thanks for inviting me. I'm really excited about it. A lot of the Uniblock team is here. And you kind of introduced me. So Kevin, nice to meet you. I'm a Torontonian. I split my time between San Francisco and Toronto, which is home. And we've been working on Uniblock for about 1.5 years now. Previous to that, as you mentioned, I was at Twitter and Coinbase. And we were looking for ways to help accelerate developers. And here we are. So a lot of this conversation came originally from an article that I co-authored in Cointelegraph, which was originally titled One API to Rule Them All, because we're looking for something that's a little bit provocative. But really the end title ended up being a developer for the decentralized web really sucks. And the reality is right now, if you're in Web 2, there are so many tools and services that are extremely hardened. They have SLAs, they rarely go down, and it's a lot simpler. And essentially, because these APIs have been around for 20 years, they don't change very often. So there's not a lot of upkeep that's required. But when you go to Web3, it's very different. A lot of these tools are 1 year old or less. They're constantly changing. Some of them are going out of business. The breadth and depth of the space is unbelievable. There are chains that we're talking about today that we weren't talking about, even 6 months ago. Solana is not dead. So the protocol layer is constantly evolving and changing. And if you look at those adjacent use cases, we really weren't talking about HealthFi very long ago, or a while ago. We really weren't talking about SocialFi and a bunch of other things. And so all of those use cases require developer tools for people to be able to accelerate what they're doing. So when we kicked it off, this is sort of what we were seeing as a problem. And this is what we're going to talk about and kind of how we're trying to solve it here at Uniblock. And so here are just, a few of the problems that people are trying to overcome if you're a developer right now. So fragmented tooling and services, and we talked about the breadth and depth, and we talked about kind of all the different use cases that are growing. API key management overhead is really annoying. If you have 5 or 10 or 15 different services, you have to make sure that you're taking care of that. Data consistencies, so all those different sources of data don't necessarily work well together. It's actually very complicated to try to make everything kind of sing. So that's a big bother that takes dev time and slows the development down. Downtime risk, we mentioned that. So a lot of these APIs, a lot of these services aren't battle hardened, and they constantly go down. They'll give you incorrect data. In fact, if you just pull regular APIs across lots of different players like Alchemy, QuickNode, Moralis, Tatum, you'll get different answers. And part of the reason there is because sometimes their calculations are different. Sometimes they have different spam filters. there's lots of different reasons why, as a developer who's trying to build into your app, the data you're going to get is going to be potentially also inconsistent. And these technologies are constantly changing. We were having a call earlier today where we're thinking about what Solana could look like in the future, what some of these other Aptos and Sui, these other ones. And obviously each one of the, Solana's on Rust, it's very different than Solidity. It's a lot different than some of the other technologies. So take that and magnify it across this. So my old team at Coinbase put this together. This is actually about 1.5 years old now, but this is only, less than 1% of the ecosystem that developers are trying to navigate. And so if you're thinking about, okay, I want to, have a DAO and I need to be able to track this data and I need to be able to track the votes and I need to be able to potentially do AML and KYC, and then I want to do it on, let's say, Ethereum or EVM in general. Anyway, you start to see how the complexity is added in this space of Web3, blockchain, crypto, whatever we want to call it. So this is kind of the space where we're at right now. This is, again, less than 1%. And so how do we start to think about solving this problem? Because we see developers as a leading indicator of what retail, what consumers will enjoy down the road, 6 months to a year down the road. And so if we can expedite, speed up the development of tools and services, then we get to excite that as example. And it's not even just the upfront cost, it's the overarching, many years cost of maintenance. So that brings us to Uniblock. We are a unified API orchestration layer. And what that means is we're taking dozens and eventually hundreds of different tools and services, and we're unifying them into one platform, and then we can orchestrate that from there. So APIs can be routed in where they need to go. If there's a problem, we can do all these things like fallbacks, we can do retries, we can do consensus. There's lots of really cool stuff we're getting into, but that's where we're at. So how do we save time and money? So, obviously integration right now, we talked about it, all different technologies, all different ways of communicating. So we've solved that. We have an entire team that's their core job. And so you as a developer just get to think about, okay, that's sorted. Let's do the front end. All the docs sounds like a simple problem, but if all these different tools you're using have all different types of documentation, all different changing, some of them are good, some of them are bad, some of them are old, some of them are not old, it's very frustrating. And so that's very, one thing that we can bring to the table. Obviously, lower maintenance costs. We're going to get into this in a second. We have a few case studies out. One case study, we're saving the person several $100,000 a year. One of them, we're saving several percentages. So maintenance cost is a huge one. It's not just the upfront. Normalizing the data, obviously really important. Faster integrations, unified billing. This also sounds maybe trivial to people that aren't dealing with this, but if you've got 5, 10, 15 different solutions that you stitch together, that means you have 5, 10, or 15 different bills. And one thing I'll note is that Uniblock is free. So we effectively sit on top of all these different solutions, and we, because we're buying in such bulk, we get a better price than any one of our customers can get on their own. And we take a cut of that savings. So all these services and all these tools that we bring are free. And we actually, in a lot of ways, we pay you to use the product. But unified billing is one of them, and you can actually see how much you saved. Future-proofing, obviously everything's changing. You don't need to worry about it. Fallback, which we talked about. If, let's say, Morales goes down or breaks or something happens, we can automatically give you QuickNode, or we can give you Tatum, or we can give you whomever, an auto to retry. So, we can keep trying if that's something that the developer wants. I'm going to try a video. Let's all, do a quick one. Hope the video makes sense and the sound works as well. One sec.
Hello, everyone. My name is Mo. I'm a product manager here at Uniblock, and today I'm here to show you guys how to get started with your first project using our platform. So once you log in, you're redirected to this page where you can do your previously made projects or make a new one. And all you need for a new one is literally just a name. So you come here, name, and boom, there you have it. So once you make your project, you head on down to the integrations tab here. Well, you'll see that you have no current existing providers. But all you have to do now is just scroll down to see all the ones that are available to you from Uniblock's end. You can click on each one to see all the different supported endpoints, as well as the supported chains for every one of them. Well, let's say for now you want to make your project with Alchemy and Morales. Well, you just scroll up, you go add provider, click on Morales, and you have the option to either configure it with your own pre-existing keys or use the Uniblock key. That last option, to use the Uniblock key instead of the provider's key, is very important. Say you're building a project that requires multiple different providers. Each one is going to cost you with its key that you have to be paying for on a monthly basis, as well as the time spent learning how to build with it and how to maintain it. This is where Uniblock comes in. We manage it all for you. You just have to connect your project to the unified API and gain access to the same data, as well as a single consolidated bill, so you don't have to keep track and pay for numerous subscriptions at a time, which would end up being more expensive on their own than compared to us. That's where Uniblock's main value add is. Now that we have Morales and Alchemy set up as providers for our project, let's take a look at the next major feature of our unified API, our provider priority list. So if you head down to the endpoints tab right here, you can customize based on different categories like NFTs, tokens, and so on, which provider is going to be the primary source of your data. This, however, doesn't mean that if your primary source goes down, your service goes down with it. You still have backups here, which provide your project with the data that you need for your services. So if we go down to the NFT category right here, say we want to have Alchemy be our primary source instead. Well, if Alchemy goes down, that doesn't mean your whole project goes down. You'll still have Morales as a backup. On top of all this, you can also adjust the priority list based on the individual endpoints themselves, giving you very, very granular control over data sources. So if we go down to this one right here, in terms of collection metadata, the endpoint, you can now set up a separate priority list where you can say you have Morales be on top of Alchemy instead of the default list that we made earlier. Now, let's go to the API tester tab here. This is where you get to see how the data that you'll be requesting from our providers will be packaged and returned to us. We can view their schema and use sample inputs to get an idea how everything works in the background. So choose any one of these endpoints here and simply fill and execute the example values to get a sample response. You can also scroll down to get access to the schema, and you can do this for any one of the endpoints we have access to here. Finally, let's make our way down to the analytics tab right here, where we see that we've had some sample traffic go through our project. And if we scroll down, we see detailed information for each call, such as the request type, timestamp, response time, and so much more. We noticed an interesting call down here, though. We see that one of the providers failed to provide it with the information that we had requested, but the other one succeeded. This shows us the value of Uniblock, being able to provide backup to your requests in any case one of the other providers goes down, so that we ensure that you always have uptime for your users. We're very excited to have you build the future of Web3 with us. Take care and have an amazing day.
Beautiful. So that worked great. We're almost done, everybody. Thank you for hanging in there. So we have two case studies I'll kind of highlight, and we alluded to earlier. So Buck Trips, I really like what they're trying to do. Actually, as an aside, we did a Twitter AMA today. It was really fun. I met them in Singapore, and their current product is just like a wedge to be able to get into a larger idea, which is essentially they want to tokenize the world. Larry Fink would be happy. Talked about him a little bit earlier. And so we were able to save them $200,000 in upfront costs. We got them to market 3 months earlier. They're saving about $1,000 a month, which is great. And it's a 0.5 FTE to be able to, instead of them spending that on a dev kind of keeping everything going. Oh, I'm going to put somebody on mute. Sorry, Joseph. And then we have StudySwap, another really cool project. They're trying to create effectively Craigslist for digital assets. So they don't want to be, doing the regular JPEG thing. They want to think about, okay, if it's tokenized, and frankly, these two companies should work together. If it's tokenized, you can trade it, and it's permissionless, trustless. It's really cool. And so we were able to save them a significant amount of time and money. and they can focus on kind of building the future. We're going to take care of the heavy lifting in the back end. And so we have something called a very interesting builders program. So I know there's a couple of engineers and builders on the call. If you're building something really interesting, please let us know. We want to lean in and help you. Some of the companies kind of in this list, we've got a social network, we've got a payments company, we've got a company trying to tokenize bonds. We've got a stablecoin trader, a lot of really cool things. And so if you're somebody that's building something interesting, please let us know. We'll provide every sort of help we can. So case studies, any sort of information towards, meeting VCs. We have about 150 VCs that use our data to, make some decisions. So, we can go and say, hey, Perks is doing an amazing job. And here's kind of a package, and the VCs kind of read that generally on a monthly basis. So if you're doing something really cool, let us know. We'd love to be able to highlight it. And that's it. That's me. Thank you for your time. And I'll hand it back off to the DeFi Toronto team.
That was great. Thank you so much, Kevin. I'm sure there's quite a few people who have some questions. So with that, I'll give it back to y'all. If you have any questions, you can feel free to ask, or you can post in the chat.
Yeah, I have one. Okay.
Hi.
Yeah. Hi, how's it going? So I wanted to know, Webisoft, would it be a good Uniblock rather, would it be a good option for, let's say, a trading bot, for instance, being that you need to iterate through different RPCs per se. So does it offer a competitive service in that regard?
Yeah. So we have several trading bots using the product right now. And the reason why it's more than competitive is because right now, if you are pulling from one source and that source is wrong, then your trading bot loses lots of money. But if you use our product, then you can get access to multiple different players. So your data will not be wrong. Your data will be correct. And it'll also come to you if there's like a failure. So we also have another tool, our event trigger listener and event trigger product. So that is made up of 3 different providers. And so if you are trading and you are saying, okay, I want to interact, I want to make a transaction when Bitcoin hits 40,000, for example. If you miss the 40,000, you could lose a lot of money. So this way you have multiple fail safes. And yeah, I think it would make a lot of sense to create a trading bot on the product because of that. And actually on that note, we've had a lot of conversations with companies like Jump Crypto, and they've built mini versions of Uniblock internally because of the problems that we're trying to solve. In fact, if you talk to a lot of developers that are building like at scale, they've had to build orchestration layers internally, unified APIs internally. And so we're giving you the power of Jump Crypto at your fingertips.
Yeah, that's awesome. Thanks.
Thank you.
I have a question. Kevin, that was great. Thank you so much. Aleem here. Also a product guy, so good to chat with you.
Cool.
I'm curious, like, why haven't like the Inferas and the Alchemies, come up with their own redundancy? Like that seems like it should be table stakes. Like maybe a separate instance of their service that's drawing on data from multiple sources. Curious, like why that hasn't been done yet.
Yeah, I mean, oh, sorry.
No, I know, and maybe a question that it's hard to get an answer to, but yeah.
I wasn't sure.
Speculate.
I wasn't sure if you're doing your question. So we have really great relationships with our integration partners, and there's dozens on there. And I would say it's actually a tale of multiple cities. So on one hand, you've got some of the bigger guys like Alchemy who've raised $1 billion at $10 billion. You've got QuickNode that just raised another 70 at 800. And then you've got Morales that did 50 at 200. Third Web did, I think, 60 at 160 or 50 at 160, something like that. So these people have lots of money, right? And so they're fighting a different battle than a number of the other players that we, are less brand name, that don't necessarily have the resources to do some of the things that we're talking about around redundancy. And frankly, they have a great product, but they're not necessarily ultra reliable. So I think when I talk to our partners, when I listen to people, I think, my take is that if you talk to them and say, what are you trying to build? Their analogy is GCP and AWS. So they want to be kind of like the first party player. And the issue with that is twofold. One is that, as we talked about earlier, the breadth and depth of the space is growing exponentially. Like I said, like protocol layers that weren't even a thing are now a thing. Some of them that we thought were dead, like Solana, are not. And that's just on the protocol layer. And then if you look at all the adjacent use cases and all the adjacent tools, it's growing daily. And so, and frankly, every week we get pinged by another tool that, hey, we've built this really cool trading, high-end APIs, or we're building out some like high-end like NFT APIs or whatever it might be. So the space is evolving. And so even if you've raised $1 billion, I don't think it's possible to build bulletproof AWS level product, mission critical product at scale. So I don't think it's necessarily possible. And also, I don't think it should necessarily be the case, because we're trying to be decentralized. So I mean, like in general, what we want is people that are experts in their domain. So I kind of referenced somebody that's really great at super degen APIs. They want to do that. That's amazing. And we'd love to, help them find customers and work better with the company that's doing, high-end ultra NFT like APIs. So you see more and more companies getting funded that are doing really interesting cases. And so we love to just like help them get access to developers. We have several thousand developers on the platform. We love to give them access to things that they wouldn't necessarily get. So yeah, that's my take. I think it's one, some companies have more money than others. And two, I think that their mindset is primarily around being a first party product, not necessarily being what we are, which is an orchestration layer.
Got you. Okay, that's great. Thank you so much. I have one more question, but I'm going to leave it open for others so I don't monopolize all your time. But
great. If you're a speaker and people are asking questions, it's like the best thing in the world. If you're a speaker and it's just crickets, you're like, okay, well.
Anyone else have other questions?
I'll go for my next question. I have a couple more. I'm curious, like, how do you like deal with like cross chain? I know like Alchemy and Infura will work across multiple chains as well, but do you also integrate with like cross chain bridges and other protocols like Axelar and others?
Yeah, right now, primarily it's data, and we are primarily doing like read rather than write data. So
Gotcha.
We started off with, we have about 200 different APIs, and that's kind of, and if you look at what we've got multiple different categories. So you can build mostly everything that you would use for an Alchemy or a Third Web or Morales or whatever it might be. And it feels like every week we're launching a new category. So the newest category, like I kind of mentioned to, I think it was Henry, is our listener tool. And so that's like a whole different offering where, okay, we're going to listen and we're going to, be able to make interactions based on what's happening on the chain. And so that's that's one new tool. And then, yes, I think down the road, if there's enough ask, we can start to work with other things like Axelar. So yes, the hope is that in time we'll have, instead of a few hundred APIs, we have several thousand or tens of thousands, and we're just getting started.
Gotcha. Okay, cool. Thank you.
Yeah, of course.
Last question, since I got you. I mean,
yeah, this is great. Thank you.
I'm curious, just in terms of like, you know, your like how you guys are going to market and your, you know, your go-to-market strategy. Are you looking at, you know, getting exposure to developers early on in their Web3 journey? Maybe it's going to hackathons and stuff like that, or are you primarily going to large companies and this is more of like a B2B thing where, you know, there's clearly a need for many use cases, and you know you're showcasing it to the developers internally and trying to court them like that. I was just curious, like what's been effective for you guys in
Yeah, so you know what, it is a little bit of both at present. It reminds me of Slack a little bit, where if you are a developer coming in like Henry and you're going to build your trading bot, you'll use the tool, you'll get lots of value, and then either the trading bot is your part-time job where you're just like, you know, hustling on the side, or it's your main job. And then invariably you go and work for another company or you bring it in. So it's almost like once people start to get exposed to technology, one of our biggest drivers of growth is people fall in love with it and then kind of share it out. So referrals is generally the main one. But we've also had a lot of, you know, larger companies that we've spoken to or kind of come on. So right now it's a little bit of both. I think that the space is so early and new that we have a huge opportunity to kind of go in and say, hey, like, here's, you know, by the way, did you know that you're doing this? And they would say, yes. Oh, it's annoying. Did you know that there's a solution that we can bring forward? And they get excited. So our go-to-market is a lot around kind of the thought leadership and content that we provide. So we do a lot of like articles, we come to like things like this. And so we're doing our best on that front. I would say one thing is that pretty much if you look at us on LinkedIn, we're all builders, we're pretty much all engineers. And if you look at like if you look at the makeup of a company and it's like all sales or all marketing and like no engineers, it's like, okay, well, that's like one signal. We are all engineers and builders. So I think there's obviously stuff that we do on the sales and marketing side, but it's been pretty good at selling itself, frankly.
That's awesome. Congrats.
Thank you. Oh, one other thing is that I forgot to mention is, so a lot of these integration partners are very interested in doing co-marketing. So, you know, we come out with like a Parsec or Covalent, and they're excited because it opens up other customers that they wouldn't have normally. So we have that. And then we kind of talked about it briefly, but some of the protocol layers. So, you know, if you're a Solana, you're saying, okay, we need more developers. It's the same problem when Windows, BlackBerry, iOS, Android, they're all like fighting. And they're like, okay, we need customers, but in order to get customers, we need apps. But in order to get apps, we need customers. And so we're able to come in and say, okay, well, Solana, you need more developers. Well, you know, market us and we'll make sure that you get more developers working on your tool set. So it's a little bit of a symbiotic relationship.
Right. Yeah, that's pretty clever. That's great.
Thank you.
Aleem, do you have any more questions?
No, I'll get on my end. Thanks.
We should have if you're in Toronto, we should have a beverage of your choice one day. It'd be great.
Yeah, I'd love to. I'll hit you up on LinkedIn.
Let's do it. And actually, it's so, absolutely. And if anybody else is in the city, San Francisco or in Toronto, like first off, we're on Twitter. Please reach out. And if you ever want to chat and talk about your building, it'd be really exciting.
Absolutely, that'd be great.
Awesome. Thanks, Kevin. Does anyone else have any other questions? Whether it's for Kevin or Aleem or Victor? All right. So I guess we're gonna cap it off there then. I just wanted to say thank you so much to Aleem, to Victor, Kevin. Thank you all so much for joining us today. Really lucky to have everyone. And Kevin, that was an awesome presentation. Just very exciting. Like I said, this is recorded, so we are going to upload this to our Twitter and then also to our Meetup page. And if you guys have any questions, please feel free to hit us up on Twitter as well, or you can individually message us on TG. We also have a TG group chat that we started for DeFi Toronto. So feel free to join that. And then for the survey results, it is anonymous, but we will be posting the results on Twitter as well and in the TG chat. So you'll be able to see that at the end. But with that, I just wanted to say thank you to everyone for coming, and we'll see you at our next meetup, which is online Thursday, February 22nd. So stay tuned. Thanks everyone.
Thank
Have a
you.
good night. Take care.